Now, continuing with what we are discussing in the intimation, through intimation it is stated that some amount is payable. Then within what time amount is to be paid? Within 30 days from the date of such intimation. If it is not paid within 30 days, what will happen, friends? What will happen? You require to pay the interest under section 220, and you can also be exposed to the penalty under section 221. Write down. The demand in the intimation, under section 143.1 should be paid within 30 days from the date of receipt of such intimation, Now, what is the possible consequences if I don't pay within 30 days? That is, write down. If the SSE fails to pay the demand, within said 30 days, then he shall be deemed to be an SSE in default, and interest under section 220 and penalty under section 221 shall be levied. Then friends, please do remember, in the final examination these really matters. Dates, time limits, these are very, very important. So your refer before exam notes should be with what? All these time limits. Okay. Write down. Within what time that intimation can be sent? Write down. As per section 143.1, intimation shall not be sent after the expiry of 1 year from the end of the financial year. 1 year from the end of the financial year in which return is filed. Of course, friends, try to understand. Within 1 year from the end of the financial year in which return is filed, intimation should be given. We gave the intimation stating that the SSE is eligible for a refund of so much of the amount. But by then we have not sent the check. You can very well send the check for the refund even after 1 year. But that intimation under section 143.1 that the SSE is going to get that particular refund, that must be done within 1 year from the end of the financial year. पहले तो intimation under 143(1) within the time limit सर्व कर दो, बाद में आगे पीछे चेक भिजाओ. If there is a delay in sending whatever the refund that the SSC is due for, department will pay the interests. So as such there is no time limit for getting the refund check. Time limit what we are discussing only is with respect to the issuing of intimation under section 143(1). It should be done within 1 year from the end of the financial year. Later on it is not correct to send the intimation. If you found out later that there is a error or a mistake, then issue a notice under section 143(2) and take up the case for regular assessment and complete the regular assessment is the point. Then friends, here a very interesting case, Supreme Court in Gujarat Electricity Board. We discussed a point. After issuing intimation under section 143(1), can the case can be taken up under section 143(2)? We said yes, nothing prevents. Very well, case can be taken up for 143(3) regular assessment, for which notice can be issued under section 143(2). But reverse is not correct. What is it? Reverse is not correct. Vishnu Lakshmi position. Got the point? I think you might have seen where Vishnu is sleeping and Lakshmi is giving him massage. This is an acceptable position. Reverse does not look right. Like that only, here also, after issuing a 143(2) notice, can I issue the intimation under section 143(1)? Not correct. Because already you have decided to take up the case for regular assessment, issued a notice under section 143(2), ask him to bring the books, all errors, mistakes, unnecessary claims, wrong claims, all those things. You complete and issue an assessment order. Why? After taking up the case for regular assessment, you need to issue 143(1). After issuing 143(1), you can go to 143(2) to take up the case for regular assessment under 143(3). But after issuing 143(2), don't resort to send an intimation under section 143(1), because unnecessarily the SC will be in confusion. Okay? Don't confuse anybody. Chalo, likh lo. That is, this is a famous case. Now, where notice under, noteworthy point here is, where notice under section 143(2) has been issued, where notice under section 143(2) has been issued, comma, then in that event, comma, then in that event, no intimation under section 143(1), no intimation under section 143(1) can be sent by the assessing officer, can be sent by the assessing officer. What is it, friends? Vice versa is possible. Vice versa is possible. That is, after issuing the intimation, notice can be well issued under section 143(2). Yes, successfully we understood what is intimation under section 143(1) and all related issues. Let me quickly sum up the thing. What we said, what is an apparent mistake in the return of income? After correcting that only you please send intimation. You please send the intimation बोल के अब Finance Act 2008 stated what? New methodology of issuing intimation is prima facie processing, kindly do it. Check whether there is any wrong claim whereby one entry is inconsistent with another entry, or a claim for deduction or exemption is made without giving sufficient proof, or where a deduction is claimed beyond the statutory limit of, say, SSC made investment to the tune of 2 lakhs, but there is a limit for claiming the deduction under section 80C. He can't claim more than what is the statutory limit. These kind of mistakes which are apparent by looking at the return, please process it, correct it, and then send the intimation. And the whole lot of purpose of sending the intimation is only to inform the SSC what is tax payable or refundable, or if there is any loss which is returned by the SSC that is undergoing any change, to intimate such a change in the loss, you send the, what is it, intimation is what we understood. Now I move to the 143(2). What is 143(2), friends? Notice to be issued to take the case under section 143(3) scrutiny assessment. Write down 143(2), notice for making a scrutiny assessment. Notice for making scrutiny assessment under section 143(3). See, first and foremost important thing is what? Point is, only when the return is filed under section 139, voluntary return, or when the return is filed in pursuance of a notice issued under section 142(1), you can issue a notice under 143(2) to take up the case for scrutiny. So what is the point here? Only when the return is filed, then only you can take up the case for regular assessment under 143(3). If that SSC is not filing a return at all, you can't involve or invoke 143(3). If that fellow don't file the return voluntarily, or even after you are asking him to file, then only recourse that is available is you have to take up the case for best judgment assessment under section 144. So prerequisite for issuing a notice under section 143(2) is what? SSC should have filed the return either under section 139 or under section 142(1). Write down. Only when the SSC filed, only when the SSC filed, only when the SSC filed return under section 139, under section 139, or in pursuance of, notice issued under section 142(1), case can be taken up for scrutiny assessment case can be taken up for scrutiny assessment under section 143(3), for which assessing officer need to issue notice under section 143(2). दोस्तों, in saying so, what we want to communicate, that is, there is a purpose with which case will be taken up for scrutiny assessment. उन्होंने रिटर्न डाल दिए, उसमें he is making claim for certain deductions and exemptions, and I just wanted to check before I pass the assessment order whether all those claims are correct or not. Although he gives certain proofs, still I want to go in detail into the books of accounts and documents. For that particular purpose, we are asking 143(2) notice to be issued to take up the case under 143(3). So unless a return is filed, you can't take up the case for scrutiny assessment, for which you are issuing the notice under section 143(2). So there is a objective behind issuing the 143(2) notice. What is the purpose or the objective? Write down purpose oblique objective. Make it side heading. Purpose oblique objective. In order to take up the case, under section 143(3), notice will be issued under section 143(2). Right, friends. Here the noteworthy point would be, what should be the time limit with which this 143(2) notice can be issued? That is, the time limit prescribed is 6 months, but you should note 6 months from which date? From the end of the financial year in which the return is furnished. Write down. Notice under section 143(2) shall be served before the expiry of 6 months from the end of the financial year, in which a return is furnished. Right, friends. By now, slight confusion should be there in your minds. If it is not coming, that means you are not listening. What is the point that I am driving here is, so far I explained two notices. One is notice under section 142(1), inquiry before the assessment, and notice under section 143(2), notice to take up the case for regular assessment under 143(3). Can you make the distinction between these two, sir? Yes. One is before the door, another is after the door, that is assessment proceeding. See, notice under 142(1), what is the purpose of that particular notice? If the SSC has not filed the return, requiring him to file a return. That is the one objective. Second is, if they wanted to see the books of accounts, not only of the previous year, but also 3 preceding previous years, for that purpose also notice is to be issued. Or other way round, if the assessing officer wanted to get the detailed information regarding the assets and liabilities, either shown in the balance sheet or not shown in the balance sheet, only thing is, not shown in the balance sheet means they have to necessarily take the approval of the higher up. This is the purpose or the objective with which your 142(1) notice is made. Of course, under 142(2)(a), they can direct the SSC to, what is it, get the accounts tax special audited and all. But the first three what we have discussed is the purpose for which 142(1) notice will be issued. 143(2) notice is specifically to take up your case for regular assessment under 143(3), a notice will be issued under section 143(2). And one important thing is, by issuing a notice under section 142(1)(2) alone, assessment is not possible. Assessment करना बोले तो necessarily notice must come in 143(2). Just to confirm or dispel their suspicion about a particular thing, an inquiry can be made. For that inquiry purpose, 142(1) notice is coming. But if you want to take up the case for regular assessment under 143(2), necessarily what should happen, friends? Necessarily notice must be served under 143(2). Then 143(2) notice देना बोले तो पहले SSC should have filed the return either under 139 or in pursuance of a notice under section 142(1). But there is no such a prerequisite that 142(1) notice can be issued only if the SSC files the return, because what we have studied, even to ask the SSC to file a return, you can issue a notice under section 142(1). So for issuing the notice under 143(2), necessarily already return should have been filed. There is no such a requirement for 142(1) notice, because 142 through 142(1) notice, sometimes when the SSC don't file the return, we will ask him to file the return. For that 142(1) notice is issued. But you can't issue 143(2) notice unless the return is filed. And one more important thing that we understood through 142(1) notice is, as such law does not prescribe any time limit within which your 142(1) notice must be issued, because whether it is a regular assessment or best judgment assessment or your reassessment or block assessment, along with the notices of those assessments, 142(1) notice can be issued because it's an inquiry before the assessment. So there is no time limit for issuing 142(1) notice, whereas what we understood that in order to take up the case for 143(3), notice under section 143(2) must be issued up to a maximum of 6 months from the end of the financial year in which you filed the return. Then, as such, no approval of anybody is required to issue 143(2) notice, but under some circumstances, approval of the Joint Commissioner is required to issue notice under section 142(1). What is that circumstance? Where the assessing officer is asking the assessee to give the details regarding the assets and liabilities which are not shown in the balance sheet is a point. See, by issuing a notice under section 142(1), maximum period for which the books of accounts can be obtained is only 3 years preceding the relevant previous year. Only those books of accounts they can ask, whereas no such a restriction is there that only these many years books you can ask for. No such kind of restriction is there when it comes to the point of issuing notice under section 143(2). This is fundamentally the difference between the 142(1) notice and 143(2) notice, friends. Then I move to the 143(3). I am not making you to write the distinctions between 143(2) notice and 142(1) notice, because I am leaving it to the students to seriously think, seriously listen the lecture also, because all these points which I am discussing are well available in the standard textbooks of many respected authors, right? No part of our mind has got any intention to reproduce any book. The whole good intention is to make the students to clearly understand what is written in the book. Only I am trying to do through these lectures all important points which as a student you are supposed to write down, jot it down, to revise before the exam. So, in no way these lectures can substitute the institute material or any standard textbook or your aptitude to, or your apt for looking at the Income Tax Act and Rules book. As a final students, you are supposed to do that. Now, come back. Section 143(3) regular assessment. Write down section 143(3) regular assessment. That is. So what is it, friends? By now you are all clear. That is, through 143(2) they will issue a notice and they will fix up a specific date when the SC need to present before the assessing officer either in person or through his authorized representative, and he should bring all the material information details which the SSC is asking, so that assessing officer will go through all that and then will pass the assessment order is the point. But what are the again noteworthy points here? See, where the SSC has not furnished his return of income, notice under 143(2) cannot be issued. Consequently, assessment under section 143(3) is not possible. Already we have discussed this point. Unless a return is filed, you can't take up the case for regular assessment under section 143(3). Note down. Notice under section 143(2) can be issued. Notice under section 143(2) can be issued only when a return is filed either under 139 or in pursuance of notice issued under section 142(1). Then friends, one more point is, let us suppose if the assessment is completed under 143(3) without issuing a notice under section 143(2), will it be a valid assessment? No. Because unless you issue 143(2) notice, you can't complete the regular assessment under 143(3). If anybody do like that, then it becomes void ab initio. Write down. If the assessment under 143(3), if the assessment is made under section 143(3) without serving a notice under section 143(2), then assessment is void ab initio, is a void ab initio. General knowledge point is, not all returns will go for the scrutiny, friends. Only 3 to 5% of the returns need to be taken up for the, regular assessment or the scrutiny assessment as given by the guidelines of the Central Board of Direct Taxes. See, for issuing a 143(2) notice, is it necessary for the assessing officer to believe that, or need to have a reason to believe that there is an undisclosed income? No. Because as you proceed for reassessment and block assessment, there you may be finding a point that for issuing a notice to take up the case for reassessment or block assessment, there must be a reason to believe that the assessee has got an undisclosed income. For issuing a notice under 143(2), there need not be a reason to believe that there is an undisclosed income. Because the very purpose of taking up the case for 143(3) is what? To check that there is no understatement of income or overstatement of the loss or under calculation of the tax. That is the purposive object of taking up the case for regular assessment. Write down. Case will be taken up for regular assessment. Case will be taken up for regular assessment only to ensure that assessee has not understated the income. A. Assessee has not understated the income. B. Assessee has not computed the excessive loss. Three. Assessee has not underpaid the tax. Has not underpaid the tax. See, one general feeling is, see, as an auditors, future auditors and the present articled clerks, you have a feeling that if we go to the audit, necessarily we should find out some points which are well against the clients or his system, internal control system, whatever it is. You are going only with that mindset, that's wrong. Audit को गए बोले तो इसका ये मतलब नहीं necessarily I have to find some qualificatory situations. When everything is good, say that everything is good. But at the same time, without looking don't say everything is good. But the whole lot of objective of the audit is not like investigation. Like that only 143(3) में रेगुलर असेसमेंट को लिए बोले तो एसिंग ऑफिसर के दिमाग में ये नहीं होना कि नेसेसरली आई हैव टू इंक्रीज द इनकम. नो, समटाइम्स an illiterate SSC who is not aware of the provisions of the income tax law failed to avail a particular benefit under the law, kindly allow that benefit to the SSC and reduce his tax liability. So this is also you have to do whenever you are doing assessing function. So take away from your mind that 143(2) notice आ गए बोले तो necessarily SC must be prepared with a bag of money to pay the higher tax. That's not the case. Sometimes it may so happen that after regular assessment there is a chance of their reducing the income by giving the benefits which otherwise we are eligible. Just remember this. There is no need for you to write in detail. Then friends, see, case is taken up for 143(3). In that situation, you just look at this particular case. Facts of the case are, for the assessment year 2007 and 8, first listen case properly. For the assessment year 2007 and 8, SSC filed its return on 30th September 2007 and on November 12, 2009 sought to claim a deduction by way of a letter addressed to the assessing officer. Assessing officer disallowed it on the ground that there is no provision in the Income Tax Act 1961 allowing an amendment to the return without a revised return. Yes. Whenever you wanted to correct a mistake which you have done in the return, it is obligatory on your part to make a revised return. You can't simply write a letter to the assessing officer stating that this is what the error I did, kindly correct it and pass the assessment order. There is no mandatory obligation on the part of the assessing officer to take up all your letters, emails and SMS and accordingly correct your return. There is no duty for him. Even the Supreme Court says the same thing. Write down. That is, Supreme Court held that a claim can be made before. Supreme Court held that a claim can be made before assessing officer in the assessment proceeding, only through revised return and not through a letter. See, earlier when we discussed about the powers of the IT-AT, we said, can the IT-AT can take up a fresh evidence or a new ground of appeal? Yes. But that is all the power of the IT-AT while doing the appellate function. That is not the power which the assessing officer has got. Assessing officer is only confined to what? Confined to the return, and based on the return, case being taken up for regular assessment under 143(3). So unless you file a revised return, they can't entertain any fresh claims of you by your letters. This is one thing that should go into your minds. And friends, another aspect before we conclude the 143(3), like there are several exemptions given for charitable institutions and certain specified institutions and organizations. And every year we are asking them to file the return of income under 139(4)(c) and 139(4)(d). There, the whole lot of objective in asking those institutions, even when they don't have the income, after claiming the exemptions, before claiming the exemption, if they got the income, we are asking them to file the return of income. What for? So that the assessing officer can check whether the institutions subjected to what conditions we have granted the exemption are duly complying with those conditions and are applying their income for that particular charitable purpose and all. We are asking them to, what is it, file their income tax returns. Their returns can also be taken up for a scrutiny to ensure whether correctly they are complying with the conditions. And the assessing officers are given the power to intimate to the central government in case of non-compliance to the conditions subjected to which the exemption is granted is a point. So the whole point which we would like to drive here is the objective here in asking the institutions to file the returns under 139(4)(c) and 4)(d) is to check and ensure that conditions subjected to which they are given the exemption are duly complied with. Otherwise, the assessing officer can well take up the matter with the central government, and central government will go through it. They can withdraw the exemption, in which case those institutions need to pay the tax is a point to be well remembered. So the whole objective there is what? Assessing officer to find whether the institution is complying with the conditions subjected to which they are granted the exemptions or the deductions are given the benefits. With that, I completed the 143(3) regular assessment. Friends, we will do with the 144 best judgment assessment. Before I get into the best judgment assessment, let me take away certain misapprehensions possibly that may be there in your mind. Generally, people feel that whatever that comes to the mind of the assessing officer, based on that, or whatever the gossip that he listens here and there, based on that he can do the best judgment assessment. If that is the feeling within you, take it away. Best judgment assessment B, to do that they have to follow certain procedure. Based on the information only they have to, complete that particular best judgment assessment. They can't just like that look into the sky and say that Akashavani told like this, so you are not coming to the call which we made, so we feel that this is what the tax you require to pay. Like that they can't do. So looking at under what circumstances case can be taken up for best judgment assessment. By now you are through with one or two occasions. situations. What we said, what is the consequence if you don't comply with the notice issued under 142.1? If you are not responding or responding not in the manner which you are expected to respond, then your case can be taken up for the best judgment assessment. Then friends, you are failing to file the return of income under section 139.1, and you are also not filing your belated return, and you are not responding to the notice issued under section 142.1, and when we are asking you to undergo the special tax audit under 142.2a, you are not getting it done, and you are not complying with the requirements for which we have specified in that 143.2 notice. These are all the conditions subjected, that is under which your case can be taken up for the best judgment. Of course, even the best judgment also, based on all the material that the assessing officer gathered, he has to complete the best judgment assessment. Write down, that is section 144, best judgment assessment. Section 144, best judgment assessment. That is, under the following situations, case can be taken up for best judgment assessment. Case can be taken up for best judgment assessment. Number 1, SSC failed to furnish the return, under 139.1 oblique 139.4 and fails to comply with terms of the notice issued under section 142.1 oblique 143.2. Next, next point, SSC fails to comply with direction issued under section 142.2a, that is special tax audits. Then friends, the noteworthy point here is, even if the assessing officer want to do the best judgment assessment, a show cause notice must be issued under section 144. Of course, with an exception that in case if the SSC is not responding to the notice issued under section 142.1, then there is no need for assessing officer to issue a show cause notice to take up the case under section 144. Because when we are asking him to file a return and we issued a notice under section 142.1, he is not responding. So for such a fellow, there is no need for you to issue a show cause notice. Why your case cannot be taken up for best judgment assessment. But he filed his return but failed to comply with the direction under section 142(2)(a) or failed to comply with the terms and conditions of that particular 143(2) notice, then to take up the case for best judgment assessment under section 144, necessarily a show cause notice must be given. Write down, friends. If an assessment under section 144, if the assessment under section 144 is made without giving show cause notice, under section 144, then the assessment is void ab initio. Friends, through a circular issued by the CBDT, it is being clarified that the assessing officer under section 144 cannot assess the income below the returned income and cannot assess the loss higher than the returned loss. Try to understand the point. This restriction is not there for 143(3). Regular assessment जब हम पढ़े, क्या पढ़े? After doing the regular assessment, assessing officer can pass an assessment order wherein income can be lowered, but it cannot be done once it's a case of 144 best judgment assessment. Write down. Through circular number 549, CBDT clarified that assessing officer under section 144 cannot assess the loss, cannot assess the income below the returned income. इसका मतलब क्या हुआ दोस्तों? Once it is a case of best judgment assessment, either they should accept whatever the returned income or they have to enhance the income. Similarly, either they have to accept the loss or reduce the loss. Benefit नहीं देना best judgment में. Income को lower करना बोले तो SC को benefit देना नहीं देना, जो cooperation नहीं कर रहे हैं उसको benefit नहीं देना. Loss कभी भी कम नहीं करना, loss कभी भी increase नहीं करना. कम करे तो we are happy. Who is happy? Department is happy. So CBDT gave a circular stating that once the case is taken up for best judgment assessment, income what is returned, you have to either accept it or enhance it. Don't lower the income. Similarly, either you accept the loss or reduce the loss through your best judgment, but cannot enhance the loss. Write down. That is, loss cannot be enhanced beyond the returned loss. Loss cannot be enhanced beyond the loss. And one more thing that you need to understand is, any order should be a speaking order and should be in writing. Like that, even 144 order also should be a speaking order and should be in writing. Ad hoc basis में कभी भी assessment complete नहीं करना. Write down, because what is the material he has gathered, on what basis he has arrived at that particular income, this need to be well stated in that particular order. Write down, assessment under section 144, assessment under section 144 cannot be made in an arbitrary manner or on ad hoc basis The assessing officer must specify the basis of computation. So with that, successfully we did with the section 144 best judgment assessment. Thank you.